Good morning, everyone. Welcome to the second webinar of our Made in Manitoba Tariff Support Program. Thank you to Al and Rhonda from GHY again for being with us here today. I'll let you two more formally introduce yourselves in a second. First, I need to thank the Government of Manitoba for not only supporting today's webinar, but making available $1.5 million in funding for industry tariff supports. Final details on this programming is being confirmed in about 90 minutes or so, so stay tuned for updates on how to connect on that. Two quick event updates. Part of our Made in Manitoba tariff support programming includes hosting a Made in Manitoba Manufacturing Summit. That is being held May 13 at the Fort Garry Hotel in downtown Winnipeg. Don't have the agenda finalized yet, but it will be an afternoon and an evening. So if you're interested in attending, save the date. And now, more than ever, members need to focus on productivity and efficiency supports, and CME is here to help with our Lean and Training Services team, as well as our upcoming Embracing Excellence Conference. Canada's largest Lean conference will be held June 9th to 12th here in Winnipeg. Yesterday was technically the last chance to register at a 20% discount, but because we've got so many people here today, we're going to make it available for a 20% discount again today and today only. So if you're interested in attending Embracing Excellence, please register today to save yourself those funds. And with that, Al, Rhonda, I'll throw to you. Thanks very much, folks.
Well, thanks, Terry and CME, and thank you all for joining. Today, our discussion is going to focus on Canada's portion of the tariffs. In Canada, we call it a retaliatory surtax. And, it reminds me almost of when I think about what NAFTA used to be, at least the countries within NAFTA could agree on what a name was, and we called it NAFTA. And now in Canada, we call it CUSMA. In the US, we call it USMCA. In Mexico, we call it TMEX. So our future webinars, I think, is we're going to focus on that word tariff, because tariffs are what people are knowing it by based on Mr. Trump being the driver. But Canada's retaliatory surtax is just that. It is a tariff. We're going to talk about why it exists and what importers need to know as they're thinking about these additional costs or the potential costs that can occur. And we're going to walk through some background information, recent updates, and mitigations. As Terry had talked about, this is one of a series of webinars, and we're happy to just step back and pause. This is going to be a brief webinar because what we really want to get to is questions and collaborations with CME members and guests of members or guests of CME. Our previous webinar really dove into the U.S. Tariff Foundation context and strategies. Today, again, we're talking about Canada's retaliation. But what I wanted to draw everybody's attention to, and I'm probably going to elbow Rhonda as I work on this, what you should see here is something that came out just yesterday. And as we look at tomorrow as being Liberation Day, the foreign trade barriers and the depth of this particular report that was published by the Executive Office of the President is rather significant, and not just significant for Canada, but significant on a global basis as what US is seeing as to the associated surpluses or deficits as they look at their particular trade situation. So that's just a little added reading bonus that people should turn to later. It may drive, or I certainly will drive, as to what tomorrow's announcements are going to be. And with that, we're going to proceed with talking about what surtaxes are. Oh, I'm sorry, if we could advance the slide. And there we go. Here we go. So a surtax is basically, it's an additional tax charged on top of the regular duties and taxes, and it can be implemented immediately and even applied retroactively. It's done legally based on the Customs Tariff Act that's covered within Section 53. And it's usually as a result of trade retaliation. That's the world we're living in right now. There has been some confusion, and so we will want to help people with that confusion. If you are subject to one of these retaliatory surtaxes right now, even though your product is duty-free under the USMCA or CUSMA, whatever you want to choose to call it, if your tariff classification is shown on one of those lists that the Department of Finance has provided, and if your product is made in the United States, you are going to be subject to an additional 25%. And right now, that 25% is largely based on certain specific items, about $30 billion worth of those items that normally are imported to Canada, as well as another 30 billion of what would be impacting the Canadian steel and aluminum sector. In the case of the Canadian steel and aluminum sector, the US put forward their tariff. Canada, in turn, retaliated. And I can't stress it enough. It really comes down to the origin of the product. It doesn't matter if you're subject to the free trade agreement or not. The 25% surtax applies on either side of the border. I would also like to really draw to the attention of particularly the Canadians on the line right now, which I believe should be most. It's the importer of record that bears this tariff in the United States or SURTAX in Canada. And generally speaking, as Canadians, we act as the importer to bring goods into Canada. And then when we manufacture goods and then return the goods in a finished state to the United States, we act as the importer of record again. It's a non-resident importer, but we generally act as the importer of record again. So it is the Canadian business that is going to be usually, or in many cases, feeling this burden more than any other, the tariff coming in and the tariff going out. Next slide, please. Overview of where we're at right now. This slide is really generic. More detailed analyses are available on the websites of the Canadian and US government or GHY's website, where we've put this tariff tracker in place that addresses not only the overall issue, but it also drills down because it is the devil in the details. We all know there's been threats, and some of them have been walked back or even postponed. So it's important to take a look at the details as it relates to each of your own unique business situations. Again, the current state for shipments heading into the United States, goods of steel and aluminum are subject to 25%, and goods that are of Canadian origin that don't meet the USMCA rules are also subject to the 25%. So if you can't claim the free trade agreement, a 25% surtax, or I guess it's a tariff there, a tariff applies. So what happened even at the start of last month, because we're April now, at the start of last month, the first 3 days, what the intent of the International Emergency Economics Powers Act was to apply the 25% on anything, whether it was subject to the USMCA or not. That was in place for 3 days. And if you were assessed tariff during those 3 days, unfortunately, at this moment, it's tough luck. And it looks like that's going to last. But after those 3 days, President Trump walked back and said, you know what, if it's subject to the USMCA, we're going to be okay with goods entering Canada duty free this month. But if it's not, if there's no certificate, you're going to be subject to that particular tariff. Canada has advised that they're, as far as their retaliation measures go, they're going to put 25% surtax on US products, and they've got certain lists that relate to the products they're going to put them on. In the next slide, we're going to talk about the stages of where those lists apply. But what's really important to know is Canada has taken a much kinder and gentler approach. This is my opinion only. Kinder and gentler approach in that we are saying to industry, we're saying to CME members, as part of the Department of Finance, please have a look if any of the tariff classifications we're looking at to put a surtax on, see if the impact is going to be incredibly adverse to your business, whether that be causing a loss of employment, an inability to be profitable, or you just can't get the product other than the United States. And the government will look at an ability to provide a remission or a type of relief so that you're not paying the tariff when the surtax when it's coming into Canada. See how difficult those two words are, the surtax when it's coming into Canada. But know also that if any of your manufacturing that pays the surtax winds up sending a finished product into the United States using an item like that, you're eligible for a duty drawback to recover that portion of what goes into the United States. There are other type of relief opportunities as well that Rhonda may cover later, or maybe on another webinar. Next slide, please. So just to recap the current dates, where we've been and where we're going. On March 4th, we did say as Canadians, look, we're not happy with where things are. We want to put in a $155 billion surtax. We only put in 30 billion, the first list on that, and we're holding on the second list. March 13th, when the aluminum and steel came in, we put in $30 billion surtax as well. And tomorrow, I guess we're going to wait and see what happens. A lot is contingent on how the U.S. escalates, but we're encouraged. Sorry, we are encouraged based on what it looks like here. It doesn't look like Canadians are as bad of a country as other countries are in relation to the overall U.S. trade environment. And I guess we'll see how that plays out tomorrow, and also encouraged based on some of the dialogues that have occurred with Carney and President Trump. Next slide, please. Recap, list one that went in affected goods that were March 5th or later. List all subject goods, or list two rather, is going to be implemented after April 2nd. And again, the surtax hits everything based on the tariff classification. So it's really important that your tariff classification is right, because you'd hate to have a future audit look and have somebody say, well, oh no, you picked the wrong tariff classification. Now you get a new tariff classification and this whack of backdated surtax. Whether the shipments are personal or commercial, if that tariff classification is used, it's on you as importer to be liable, whether that be at time of release or whether it be at time of audit. With that, I'm going to turn it over to Rhonda.
Thanks, Al. Next slide, please. So I just wanted to talk briefly about customs notices. So the government, when they want to share information quickly, they'll issue a customs notice as opposed to a policy and a D memorandum. Often government will send out a customs notice and they have these sweeping statements that all subject goods, all, and then they list the exceptions. So it's very important to read the entire notice and make sure that you understand the exceptions. So in customs notice, that Al just talked about, 2510, and then there was 2511. 25, of course, is the year, and the second number is the number of notices they've issued in that year. It says all subject goods will have surtax. The exceptions are for aluminum, goods of Chapter 98, some of Chapter 99. However, there's no exceptions for steel. Next slide, please.
Actually, I have a question, Rhonda. Could go back, please? Rhonda, I don't know what Chapter 99 or 98 mean. What does that mean?
So goods are classified in the tariff classification book. Chapter 98 is specific to Canada, as is Chapter 99. And if certain conditions or criteria are met, it relieves duty.
So would 98, correct me if I'm wrong, that's commercial goods, and 99 are casual goods? Is that fair?
It applies to both commercial and casual goods.
But only those unique aspects that are shown of those classifications that overlay onto other classifications.
Correct.
Wow. So that's really climbs into end use, I guess.
Fine print.
Okay.
Gotta read the fine print.
There we go. Next slide, please. Thank you. Sorry to interrupt.
That's okay. So the purpose of this webinar was obviously to educate, but also to get you guys thinking about some mitigation strategies. So we want to keep money in our pockets and not the government's pocket, obviously. So one of the ways, and Al spoke to this just a few minutes ago about tariff classification and the importance of having it correct. So we have a picture of an aluminum box. So is it a tool case? Is it a toolbox or an equipment case? So depending upon the construction, the use, and the marketing of that case, it could be classified 3 different ways. So under Chapter 76, which is a simple container not I can't even say the word, specifically designed to fit a tool and made entirely or mainly of aluminum. Or it could be a case of Chapter 42. The case has an aluminum frame, but is covered with textile or plastic on the outside and is usually used for personal effects or tools. Or it could be an aluminum case under Chapter 82, which is an aluminum case sold together with tools inside, and the set is set up for retail sale. So again, make sure you understand what your good is. If you need help, reach out to us or somebody with tariff classification knowledge to make sure your goods are being classified correctly. Next slide, please. Country of origin, minimal processing. We talked about this at our last webinar as well for repeat visitors. Minimal processing while in the United States still qualifies being a different country of origin. So D1131 is your reference on marking of imported goods. So manufacturing Manitoba produces aluminum sheet stock. The product is shipped to the US for cutting and polishing. No forming, stamping, or reshaping occurs. Cut sheets are returned to Canada for fabrication into a finished component. When the product comes back from the US, it's still Canadian origin, therefore no surtax would be applicable. Next slide, please. Goods of Chapter 99. So before I'll just use the term trade turmoil began, we really weren't concerned about goods coming from our southern neighbor or our southern neighbor because they were all duty-free, right? If it originated in the US or originated in Mexico, the 3 parties were covered under CUSMA, USMCA, or TMEC. The goods flowed across the borders, all duty-free. We weren't worried about Chapter 99. So again, Chapter 99 is a tariff code that is applied to a good if it meets certain criteria. Now, this is very important because surtax is not always applicable on goods if they qualify for Chapter 99. So surtax is not applied to a good that some goods that qualify for Chapter 99. Read the fine print. An example: articles and materials that enter into the cost of manufacture or repair of a good. And I'm going to use the example of a horticultural elevator or conveyor. It does qualify for Chapter 99 code, and therefore surtax would not be applicable on those elevators or conveyors. Next slide.
You know, I actually was a little partial to that slide because that vehicle looks like my first car. So you know what guys are like with their first car. Like I hadn't seen that before. So you're telling me that, and obviously that's well over 25 years if you think about my first car. If I had a part, I would be exempt from having to pay surtax on that part. But if I use that same part for my current car, which happens to be new, I would be paying surtax on that. Would that be fair?
The part has to be applicable for use in a car of 25 years or older.
Cool.
It can't be a multi-use.
Well, and thanks. That was even the same. It's even the same color. Go on, 3. Next slide.
Next slide. Valuation. So Al had talked about importers of record. So you're acting as an importer of record when goods are coming into Canada. And in some instances, you're acting as the importer of record when goods are going to the US. Regardless, there's certain deductions that are allowable deductions under the Customs Act in Canada and under the Code of Federal Register regulations in the US. So allowable deductions are construction, duty and taxes, transportation costs, and prompt payment if it's included in the price paid or payable. Next slide. So here's an example. Your price to the customer is $15.45. That's not the price that we want to be accounting or telling customs that we want to be declaring to customs. Let me say it that way. So you've paid $15.45. That's not what we want to report. We want to report, you know what? There was we paid the freight, we paid the duty, and we paid the brokerage. Those are allowable deductions. The amount we want to be reporting to CBSA, Canada Border Services Agency, or CBP, US Customs, is $13.0580 in this example. Make sure you're taking advantage of all your deductions. Next slide.
And those things didn't matter as much before when things were duty free. And in many cases, we often lost sight of them because, as Rhonda alluded to, you have to validate and qualify it. But if there's no reason to validate and qualify something that's duty free, who cares? But with a 25% tariff or potentially 50% if it stacks, or God forbid, if the reciprocal tariffs wind up being closer to 100%, then every deduction makes a difference.
Duty drawback. So in the US, I call it the Trump tariff. You're not allowed duty drawback. In Canada, again, as Al said, a kinder, gentler country, we do allow duty drawback. So if you have imported a good, used it as an input, processed it, exported a finished product, you can claim drawback on the duty you've paid, if there was duty paid, or on the surtax or the retaliatory tariff. Next slide. Bonded warehouses. So goods that come into Canada can enter a bonded warehouse. And a bonded warehouse is a warehouse that is under customs control. So they enter a secure facility and you don't pay the duties and taxes until it's removed from that facility. So if I am importing a finished garment, I can put it in my bonded warehouse and it can stay in my warehouse. And as I take it out of the warehouse, I can pay duties and taxes for the quantity that's being consumed in Canada and the quantity that's being exported to United Kingdom. I would not be paying any Canadian duties, taxes, or surtaxes. Next slide. Our references for you, the customs notice 2510, 2511 that we spoke to, and I referenced D1131 for the marking of imported goods.
I think what's also important to reference about these notices, if you go into them, they do provide additional links to areas that relate to Department of Finance as far as the relief and other applications and opportunities. So it's not just that there's a bunch of tariff classifications here that exist that you should be aware of and also overlay to your past imports, but there's planning information that resides within those notices. So they're very important. And next slide. And this is where we can listen and talk as well as just talk.
All right, perfect. Thank you again, Al and Rhonda. Folks, if you have questions, throw up your hands. Slay will be managing the Q&A. If you want to throw a question into the chat, please do. In follow-up to today's webinar, we're going to send you a handful of links. One will be the webinar slides so that you can get access to those customs notices and that country of origin link. We're going to dig up a link to the Foreign Trade Barriers report that Al kept elbowing Rhonda with. And we're also going to send you a link to Embracing Excellence. Should you want to register today, take advantage of the discount. And Al and Rhonda mentioned their tariff tracker website. A lot of great information there, so we'll send you a link to that as well. So yeah, please, now's the time where we can get into some questions. And so I throw it out to our audience. While you got Al and Rhonda here, take advantage, please. It looks like there's one in the Q&A right now, Slay.
We do imagine there's going to be a whole lot more after tomorrow.
Mm-hmm.
Okay, so the question I have in The Q&A is, does that foreign trade PDF show what is going to happen tomorrow?
No, it does not. What it does is it provides an awareness on a country by country basis how US feel about the trade barriers that exist and the unfairness that may exist. It talks about surpluses and it talks about deficits and it talks about the changes. Like in 2023, Canada's trade with the US was this much, the US's trade with Canada was that much. 2024, the same thing. And then it shows the difference in the numbers, whether they were going up or down. It shows again the disparities. It's a 400-page report, and it goes country by country and talks about the nuances of those trade barriers. It's very well written, very well researched, and I guess that was what President Trump had made reference to, that he wanted information by April 1st. I had no idea it would look like this, but it's worth a look. Canada, we look like we're good folks. We do have a couple of challenges, but we look like we're good folks, certainly compared to many others that exist. And this, I guess, will open the door to what may be said as to reciprocal tariffs. But we don't have a crystal ball other than, a preliminary look. And we'll see what tomorrow at 3 p.m. holds.
Page 41 of the 400-page document is where you want to start reading.
Thank you for that heads up.
Well,
Yes.
and page 389. The 41 shows Canada, but 389
okay,
shows the trade numbers, surpluses and deficits.
Okay, two more questions, both applicable to the drawback. I'll ask them both at the same time. Can you provide some more specific detail regarding duty drawback? How does it work? And the other question was, can you explain the drawback again, please?
Yes. So we'll take it in bite-sized pieces. You import goods into Canada, you pay applicable duties, taxes, and surtaxes. You take that article and you manufacture a conveyor. We'll use conveyor. You manufacture a conveyor. You then export the conveyor, and it doesn't have to be to the US. It can be any country outside of Canada. You can claw back or draw back the duty that you paid upon importation of the input. So in order to file a drawback, we need all your import information and your export information. So for the US, there's a US consumption entry. It's called the 7501. It's a numbered document, bills of lading, invoices, etc. Other countries, we don't have their consumption entries. So it is bill of lading, invoices, purchase orders, etc.
But in the simplest of terms, like when I think of conveyor, great example. Let's say you were able to have duty-free everything on your conveyor except the belt. The belt was dutiable at 25% or maybe even 50% with a reciprocal tariff. So you make these conveyors, 8 of them go to Canada and
No, we're going the other way.
10 of them go to the US or abroad, right?
Okay.
So the 10 that go to the US or abroad, the 10 particular belts that went into those, you would say, hi, I paid 25% on those belts, and I'd like to have those belts draw that particular duty back.
Again, imports into Canada, exports anywhere in the world.
There you go.
And so by import, Rhonda, just to clarify, you mean imported from the US under the Canadian surtax?
Imported from anywhere, you can draw back. So like I said, you can draw back your duty and your surtax. You don't get to draw back your GST because you put it in as an input tax credit.
And you are 1,000% right, Rhonda, but where everybody's mind is right now, and as I listened to Terry's comment there, right now, like 80% of the tariffs into Canada, even without a free trade agreement, are duty free. So it's this surtax or this additional tariff that is what's on everybody's mind. So if I'm having to pay that extra 25%, I want to know that if I ship a finished product that includes an input that I've paid a tariff or a surtax on, that I can get that back. And the mechanism of doing that is the drawback.
Yes, you can. And yes, it's a drawback.
Thank you.
Okay, perfect. So
I got too wordy.
Again, another question. How do we apply for a drawback through a broker or directly through CBSA?
So you can, but either or. Applying for a drawback is a new process under CARM and it has to be submitted through the CARM portal. For those of you that have worked in CARM, it's not a very, I shouldn't be saying this out loud, but in my humble opinion, it's not a very user-friendly system, but it can be filed through your broker, or you can do it on your own.
And ironically speaking, Rhonda brought up page 41. Page 41 of the foreign trade barriers is the US saying that CARM is a concern to them, and they're evaluating that concern deeper. They're seeing that as being part of a barrier, but that is how you can, well, that is how you should make that submission, whether you do it through a broker or do it direct. Either works.
Perfect. Another question came in. What would be an example of a U.S. origin item that is not under CUSMA free trade?
A US origin item that's not under CUSMA. That would be a US origin item. So the country for marking purposes is US, but it doesn't meet the rule of CUSMA. So it has to meet a tariff shift depending upon what the rule is, or a tariff shift or RVC, which is regional value content. So it would be one of those goods. I'm trying to think of an example.
Would the orange juice thing work for that?
Oh, orange juice. Orange juice is good.
Okay.
So yes, thanks, Al.
You're welcome.
Orange juice. So Florida orange juice is marketed as Florida orange juice. That's labeled as Florida orange juice. Florida orange juice isn't necessarily Florida orange juice because they source oranges from other countries, such as Brazil. And the oranges are commingled. So even though its country of origin is the US, because that's where the orange juice is manufactured, it doesn't meet the rules of origin under CUSMA or USMCA to qualify for US origin for CUSMA purposes. Good example. Thanks, Al.
Perfect. Nothing else in the Q&A. We got not quite 10 minutes, folks. So last call for questions. Looks like somebody may have their hand up. Soleil, I don't know if we can let the person with their hand up ask their question.
Yes, I do have a question. Say for drawback, oh, sorry about that. We have this one example. Our raw inputs come from the United States. We convert it, send it to a customer of ours that then packages it, the product and sends it into the States. So it's a downstream effect. Can that be applied for a drawback?
Yes.
Okay.
Your customers in Canada, is that correct? And they're just packaging it for you?
Yes, the customer is in Canada.
Yep.
Then the product is packaged and then sent into the United States.
Yep. As long as there's a paper trail for the importation and export, yes, you can still file for drawback.
Okay, good to know. Hey, thank you.
You're welcome.
Thank you for the question. Appreciate it. And we certainly look forward to future webinars and what we imagine to be a whole pile more questions.
Yeah, I'm not seeing anything else, so we'll just hang on for 30 seconds. Last call. I think we got through it. A lot of great drawback questions. So if I may, in summary, what kind of, caught my attention, seek expert help. This is incredibly complicated. On that note, again, the provincial government is making some funding available to cost share these tariff engineering and CUSMA compliance activities. So stay tuned for announcements on that. Take advantage of your deductions. It is important, especially in light of these tariff levels. Details and fine print matter again. See the aforementioned point of seek expert help and get it right now to avoid future penalties was another very important comment that I picked up on from today. So seeing no more questions, we will let everybody go. There will be an email sent in follow-up with a number of links. Thank you again for your time and attention today. If you have any questions or further comments, you can reach out to us here at CME. Thank you, folks.
Thank you. Bye, everybody.